Nigeria records 15th straight month of decline in inflation as National Bureau of Statistics released April figures. Federal government says Economic Recovery and Growth Plan (ERGP) focus labs to unlock $22.5 billion in potential investments. Reprieve on the way for ex-Nigerian Airways workers as federal government settles inherited debts to contractors. Plus, Forex markets gets additional $210 million CBN boost. This is Business Express, reaching you from our Abuja studio. I am Musa Abubakar. Minister of Finance, Mrs. Kemi Adeosun, has said that the federal government will settle the inherited debts and contractual obligation to local contractors between 2006 and 2015. The minister made this known while appearing before the ad hoc committee of the Senate on promissory note program and bond issuance. The committee is chaired by the Deputy Chief Whip, Senator Francis Alimekena. She explained that the debts owed to various classes of contractors, including the terminal benefits of ex-Nigerian Airways workers, will be repaid through promissory notes and bonds issuance. The minister stated that the unpaid federal government obligations constituted a drag on economic activity across many sectors. Economic Recovery and Growth Plan (ERGP) focused labs capable of unlocking 22.5 billion naira investment opportunity. At the open day to mark the end of the first phase of the focus labs, Vice President Yemi Osinbajo assured the private sector that government will deal frontally with all issues raised during the conduct of the labs and the feedback that emanated from there to improve the business environment for the growth of the economy. Moplan Dakok has details.
One day was an opportunity for government to showcase the outcomes of the initial phase.
The reality is that if we say that we are committed to improving the business environment and serious about making our economy more market-driven, we cannot but take the outcomes of the labs very seriously. We are working to ensure that the promises made in the President's manifesto come to fruition for the people of Nigeria. It's our aim to make these focus labs a success so that Nigeria can take a transformative step towards sustained economic prosperity and social livability.
The Minister of Budget and National Planning, Udoma Udoma, said a total investment of over $22.5 billion and over 500,000 jobs are expected to be created from the various projects in the labs.
So what we now have to do is follow through on those projects and make sure that they move to realization. But in addition to that, the reason we're having this display is so that other investors can also see the work that is going on. They can be inspired to also invest.
This is very important, even though there has been serious neglect in the last several years. And that is why the present administration is laying the basic foundation to make sure that we get things right.
The initial set of labs were conducted in agriculture and transport, manufacturing and processing, as well as oil and gas.
Nigeria records 15 months of straight reduction in headline inflation. The National Bureau of Statistics, in a report this Tuesday, shows that inflation has declined from 13.34% year-on-year in March to 12.48% in the month of April. The drop is the lowest since February 2016. Food inflation also declined to 14.8% in April against 16.08% recorded in March. Figures show that the capital inflow had hit $6.3 billion in the quarter. dominated by offshore portfolio investors buying local shares and bonds. Capital imports have been growing, especially as economic activity gains pace after Nigeria emerged from a recession last year. The NBS says the strong growth in portfolio investment was due to money market yields. Financial technology is a global new trend for conducting transactions. In Nigeria, institutions are struggling to play catch-up to other nations despite vast opportunities. In this background report, Leah Katun Babatunde looks at its definition and underlying opportunities.
Financial technology, or fintech, is the new technology and innovation that aims to compete with traditional financial methods in the delivery of financial services. It is a blend of financial technology that describes an emerging financial services sector in the 21st century. Financial technology is a new industry that uses technology to improve activities in finance. The use of smartphones for mobile banking, investing services and cryptocurrencies are examples of technologies aiming to make financial services more accessible to the general public. Fintech companies consist of both startups and established financial and technology companies trying to replace or enhance the usage of financial services provided by existing financial companies. Data show that Nigerian startups raised a total funding of $9.2 million in the first quarter of 2018. According to a survey by PricewaterhouseCoopers, areas of banking and payments that fintech will disrupt over the next half-decade include retail banking, funds transfer and payments, commercial banking, microfinance banking, investment banking, mortgage, and central banking. Since the mobile internet revolution, financial technology has grown explosively. However, it is yet to be fully regulated in Nigeria. Senate President Bukola Saraki recently affirmed the stand of the Senate to support bills that have the potential to promote the growth of financial technology in Nigeria. Saraki made the disclosure when the Chartered Institute of Bankers of Nigeria team visited him at the National Assembly. Experts say surely fintech has enormous potentials of changing the landscape of transactions in the country within a short while.
I have been joined in our Lagos studios by Professor Segun Ajibola. He is former president of the Chartered Institute of Bankers. You're welcome to the program. What is your assessment of Nigeria's acceptance and opportunities available?
Financial technology is taking over the basic operations of the banking industry, not only in Nigeria but globally. So as a member of the global body, Nigeria has no choice but to embrace fintech. Fintech is already defining most of the activities and functions in the banking industry. As of today, we have digital banking, even we have products. There are currency issues that border on fintech, cryptocurrency, bitcoins. These are financial technology-induced products. We are also going into an era where we'll be talking about robotic technology, where we'll be talking about artificial intelligence. These are fintech-related products. And when we redefine banking in terms of all these products, then we must be prepared to embrace fully financial technology in Nigeria. That is already happening because so many of our banks are redefining their products, this service offering, and other activities, moving away from brick and mortar banking to technological-driven banking.
With 2 years to go,
What is the place of disruptions in an economy like Nigeria?
Just on Tuesday last week, I led the Chartered Institute of Bankers delegates to the National Assembly, and we met with the Senate President, and other principal officers of the National Assembly. The FSS 2020 team was in that delegation. And there are quite a number of bills before the National Assembly on electronic banking, bill on financial ombudsman that will enable FSS 2020 arrive safely come year 2020. So there are still quite a number of legal issues to cross. There are still a number of operational issues to cross. But the FSS 2020 committee is working very hard to ensure that all the issues, all the mandates that have not been fully implemented, that they are implemented before year 2020. But we need the support of other stakeholders, the National Assembly, the executive arm of government, to clarify those issues and those areas, and to also act on outstanding issues within their purview to enable FSS 2020 become a reality in Nigeria.
What are the strategies contained in the FSS 2020, and can Nigeria meet up?
Well, you know, FinTech has its own requirements. The infrastructural base is still weak in Nigeria. For FinTech to take the rightful place, the products and services must not suffer from the death of infrastructure, electricity in particular. There is need for constant power supply. Even the manpower requirements for FinTech, you need to develop over time. Then you need to have very effective risk management template, because FinTech is high-tech and is very, very vulnerable to fraud. And fraudsters all over the world, they are already having a field day lashing on FinTech to carry out fraudulent activities. So you must have a system that is protective of your products and services, that could minimize, if not completely eliminate, fraudulent intent. That is still an issue in Nigeria. And because it's a new concept, we are just going into it, we are just embracing it. We need to put our infrastructure in the right place. We need to train personnel. We need to strengthen our operational modalities and modules to enable effective policing of these products and services and their deployment, and to checkmate the activities of fraudsters in the industry using technology.
Okay, it is reported that Nigeria has some FinTech companies making global headways. What are the impediments to their local influence?
Agent banking is getting more and more robust. Financial literacy campaigns are deepening. Financial inclusion strategies to every nook and corner of the country is being pursued. These are all FinTech-related activities, because you need technology to achieve all that I've mentioned, to deploy products and services to every nook and corner in Nigeria, to also deepen financial inclusion and promote financial literacy. FinTech companies must, and they are getting more and more involved. That is happening today. Kudos to the Central Bank of Nigeria. Kudos to the body of bank CEOs. So the corporations and the synergies, and they are drawing the telcos to that fold, so that collectively FinTech will be an instrument for deepening financial literacy and promoting financial inclusion in Nigeria. That is already happening.
Okay, thank you very much, Professor Segun Ajibola. Investors see big oil surge as the Brent nears $80. Next is a graphic representation of commodities as compiled by Bosede Abel. Sell pressure has continued to affect the Nigerian stock market. Bosede Abel brings us up to speed on trading outcome so far recorded.
The Nigerian Stock Exchange All-Share Index ended on a negative note. It depreciated by 0.15% to close Tuesday's session at 40,615.42 basis points, while market capitalization dropped to 14.7 trillion naira. A total of 203 million shares valued at 4.4 billion naira in 4,090 deals were traded by investors on the floor of the exchange. Nestle topped the gainers table with 2.81%, followed by Nigerian Breweries and CAP, while Zenith Bank, FBNH and Oando led the losers table. Top trades measured by volume were recorded by Guaranty, UBA and Fidelity Bank.
Professor Uche Owaleke joins us now to discuss trends in the capital and debt market. He is a professor of capital market and the head of Department Business and Banking, Nasarawa State University. You're welcome.
Thank you.
Okay, what is happening to Nigerian stock investors' appetite, sells off, and what is responsible for the persistent decline?
Well, I would say it's a puzzle. It's a puzzle a lot of people have been trying to resolve. You find that the market is inextricably linked to the economy, and the economy, the indicators are positive. Look at where the oil price is, given that this economy is dependent on oil. Oil price is pushing close to $80 per barrel. See where our reserves are, close to $48 billion. Okay, you have inflation rate trending down, just moderated to 12.48%, from 13.3 the previous month. You will have stability in the exchange, foreign exchange market. Okay, so you have a combination of all these indicators which should spur performance in that market. But unfortunately, we are witnessing this bearish run, and people have attributed that to also some influences, to negative influences. One of which is from the global scene, the rise in the bond yields in the U.S. I'm sure you read recently that over $5 billion have left emerging economies, to the U.S. So you find foreign investors, taking their investments to the U.S. and where interest rates are going up. Then on the domestic scene, of course, we have uncertainties too being created by first the delay in the budget passage and the prevalent insecurity that's prevalent in some parts of the country, again, you can also say even though I see that as being very too early to attribute the performance now to it, what they call election fever, anxieties around the election, but it's too early. But people have attributed some of this to the lukewarm attitude of investors or the sell sentiments that have prevailed in recent times. You see, the market just gained. For some time now, it's been a bearish run. But as at close of trading today, Wednesday, the market gained 0.93%. And that's on the back of just slight improvements in the premium bond index, which also gained, where you have Dangote Cement. Dangote Cement stock price moved. So you now have the market gaining. And then consumer goods too, Nestle, Nigerian Breweries, some of them,
Okay, there's this school of thought that have this perception that maybe because there's this government intervention, most especially in securities and exchange matters of the Nigerian Stock Exchange. What's your position?
No, I don't think that that is really coming to bear on the performance of the market. The situations we have now, from the regulatory end. The whole idea of regulation is to protect, investors, and I think whether or not we have a substantive DG at the Securities and Exchange market, the structures are functioning. Okay, ditto for the Nigerian Stock Exchange, which is also, a self-regulatory body. So I don't see that really impacting having a significant negative influence on stock market performance. As I said, what is really happening now, you have investors sitting on the fence. As I speak to you now, institutional investors are not playing as they should in the market. Pension funds, these people are being cautious in bringing funds. And foreign investors too, the latest report we have with regard to foreign investors, has to do with that of March, but we haven't seen their hands, the way we ought to have seen them. So you find a lot of people now developing this cold attitude towards the market because of some of these uncertainties I spoke about, the negative influence, in spite of the positive indicators, the macroeconomic indicators, that we have. So I'm optimistic, and as soon as this budget is passed and assented to by the president, because the market needs a trigger, something that will trigger it, to exit this, the bearish stance. But of course, as I mentioned earlier, as of today, the market, has turned direction. It's positive as of today.
Okay.
Yes.
Okay. Let's move to debt management. How are Nigeria's instruments performing?
Yes, of course. In the fixed income segment, you have particularly the bonds market is the government that dominates that market, and the government strategy of refocusing, attention from domestic to external debt is helping to bring yields down.
Yeah.
So you find that yields are going down, in the bonds market in terms of returns. And one should also expect that because of the fact that these returns are going down, if you look at the short end, of the market, that's talking about the treasury bills, for example. You also notice that treasury bills are also going down, and one should expect ordinarily that if you have yields going down in this market, which portfolio managers should be rebalancing their portfolios in favor of say equities. But we haven't seen much of that happening. But as I said, institutional investors who are cautious, who are risk averse, are looking towards the fixed income market, the debt market, where at least investments are relatively safer, than the equities.
Okay. Recently, the IMF has expressed concern over the rising debt in Africa, and although the Nigerian government says they are relatively in a safe territory, what do you make of it?
Yes. We also notice I talked about the global events affecting this market, and I talked about the yields in bonds in the US, rising, and the fact that this economy has exited recession is on a positive trajectory. Okay, one should expect that to impact positively on the market. IMF recently reaffirmed that the GDP growth rate, will remain at 2.1%. Another thing IMF has also said recently is what you've just mentioned, the fact that the debt burden, is becoming huge. Okay, of course, in terms of just debt to GDP ratio, at less than 20%, we still have some room, to borrow. But what is more important, a more important indicator is the debt service to revenue ratio, which is what IMF is concerned about, and every Nigerian is also concerned about, that we are spending so much, in debt service. If you look at the 2018 budget, for example, the government has voted over 2 trillion just to service, debt. So that really is a concern, which is also why I think the government has adopted the right strategy, to address this, rising debt burden. Debt burden in terms of debt service to revenue ratio. One is to ramp up revenue, because if you ramp up revenue, particularly non-oil revenue, okay, debt service to revenue will drop. The other is also to reduce the stock of domestic debt.
Much Professor Uche Owaleke. Let's leave it there. Thank you. A quick look at global stocks, and Moplan Dakok is our guide.
European stocks were mixed, and their peers in Asia drifted downwards, while emerging markets in Africa largely closed negative Wednesday. South Africa's JSE Africa Top 40 retreated, losing 1.28%. Kenya's Nairobi All-Share Index depreciated 0.27%. Tune Index also dipped 0.22%. Namibia Overall Index 1.94%, and Ghana Composite Index 0.48%. United States stocks halted a 4-day rally with the steepest drop in almost 2 weeks Wednesday. The S&P 500 slumped 0.68%. Dow Jones and Nasdaq Composite lost 0.78% and 0.81% to end trading. In Europe, FTSE appreciated by 0.16%. CAC 40 index gained 0.23%, while DAX index dropped by 0.06%. In Asia, Nikkei 225 and Hang Seng Index depreciated 0.21% and 1.23%, while Shanghai 300 Index gained 0.38%.
In another round of intervention, the Central Bank of Nigeria, CBN, on Tuesday, May 15, 2018, injected the sum of $210 million into the interbank foreign exchange market to boost liquidity in the system. The figures released by the bank in Abuja indicate that it allocated the sum of $100 million to the dealers in the wholesale sector, just as the small and medium enterprises segment and Invisible each received the sum of $55 million each. Validating the releases, the Acting Director of Corporate Communications Department at the bank, Isaac Okorafor, said that the continued interventions in the interbank foreign exchange market was mainly to ensure sustained liquidity and stability in the market. Let's see how currencies are trading midweek. That's it on this edition of Business Express. The program returns Friday. I am Musa Abubakar.